Welcome, everyone, to the Information's TITV. My name is Akash Pasricha. It is Monday, June 15th. We are here in our New York studio where we are celebrating the New York Knicks championship. This morning, we are also watching a couple of big deals. Fox is acquiring Roku for $22 billion. It is yet another media consolidation move. The $160 share price is the highest that Roku would be trading since the pandemic era. And in other deal news, Salesforce is buying AI customer service firm Fin for $3.6 billion. We'll talk about that shortly with our AI reporter. On today's show, Amazon CEO Andy Jassy has sounded the alarm over Anthropic and Fable 5. That is according to exclusive reporting from The Information. We are going to bring on Stephanie Palazzolo, author of AI Agenda, in just a second to break that down for us. We'll also talk about our Meta news that Meta is considering a move here to curb AI usage among employees. We've also got our Microsoft reporter joining us shortly to discuss his scoop that the company has been thinking about spinning out Xbox. And I'm going to close out the show with two founders coming on. We've got GPU infrastructure company Hydra coming on to talk about their funding round, and we will talk with Abridge co-founder and CEO Dr. Shiv about his new play with Nvidia. It's going to be a fun show, so let's get right on into it. Fable 5 had quite the U-turn after its impressive release. The Trump administration issued new export restrictions on the model. Anthropic, as a result, disabled the model entirely. My colleagues over the weekend caught wind of the behind-the-scenes discussions that led to that decision, and I want to bring on Stephanie Palazzolo to share with us what she found out. Steph, welcome back to the show. It's great to have you here.
Thanks. Great to be here.
Okay, so Fable 5 comes out. Everyone is trumpeting about how good it is. And we caught wind of a discussion that Andy Jassy may have had with folks in the government. What do we find?
Yeah. So as you mentioned, this weekend was a bit of a crazy one for Anthropic. Essentially, on Friday, the Trump administration said that the company would have to cut off access to Claude Fable 5 and Mythos 5, which are Anthropic's two most advanced models, to foreign nationals. And then in response, Anthropic basically shut down access to the models for everyone because, it's very hard for the company to tell who is and isn't a foreign national accessing the models, not to mention that there are a ton of those within the company itself actually working on the models. So as some of my colleagues and I reported over the weekend, a lot of this stemmed actually initially from a conversation that Amazon CEO Andy Jassy had with senior Trump administration officials, where he essentially kind of flagged some, jailbreaks and other security related concerns that he had to the officials from the government, which then kind of snowballed into what we saw on Friday with, Anthropic at the end of the day having to cut off access to everyone.
And so do we know any more details about this conversation between Andy Jassy and the Trump administration, or is the extent of what we know just that it happened?
So it is, there are definitely different details floating around about the conversations. Essentially, what we have gathered from ours and other outlet stories is it seems like Andy was basically flagging a jailbreak that Amazon researchers had found. And what a jailbreak is essentially a way for a user of a model to kind of bypass the guardrails on the model. So in this case, Claude Fable 5 has guardrails that prevent users from asking cybersecurity related questions, since that's an area that the model is especially good in. And Anthropic was worried that users would use this model to, come up with different ways to hack, websites and software floating out there. And so it sounds like basically Amazon found a jailbreak that worked to get around those guardrails and kind of flagged this to Trump administration officials. Now, it's not really clear kind of how much Andy Jassy expected this to escalate. It's totally possible that he was just kind of flagging this as like something to look out for and had no idea that it was going to reach the point that it did, where, now you see Anthropic basically cutting off access to these models for everyone.
And it is kind of an interesting dynamic here because Amazon, of course, is a big investor in Anthropic. And So, I mean, I guess on the one hand, flagging the fact that the model can be jailbroken. AWS certainly has obligations to its customers here to make sure that everything is as secure as possible. On the flip side, I wonder what that discussion between Dario and Andy Jassy was like, because I mean, all weekend long I was on Claude, and you had that bar saying Fable 5 is unavailable right now, and I guess you could click learn more to see what it is. But I guess what I'm sort of thinking about here is how you think this plays out. I mean, we know that this call happened. Do you think maybe Dario convinces Andy to make another phone call to the Trump administration saying it's actually fine? I mean, what do you think?
Yeah, it's a really a really tough situation for Anthropic to be in. And, just taking a step back, this isn't the first time that Anthropic has clashed with the Trump administration, obviously. We've been reporting on this for months, but there's been a lot of kind of issues between Anthropic and the government, stemming all the way back to earlier this year when it was fighting against the Pentagon for the Claude models to be used in, these cases where, you know, they were arguing basically about when Claude could and couldn't be used. And so in terms of what happens next, it's not really clear. Right now, Anthropic has sent some of its leaders to DC to discuss all this with the Trump administration. And so in my opinion, I do feel like I think it's gonna be pretty likely that we're gonna see Claude Fable 5 come back in the next week or so. But obviously, I think Anthropic is gonna have to make some concessions here to, sweeten the deal for the Trump administration. And whether that is, maybe upping the guardrails on Fable 5, um, maybe, even most drastic case scenario, like maybe rolling back the public rollout a bit and still keeping it to a pretty small group of testers. Another thing that's been floating around a lot is this idea that the Trump administration is looking to take stakes actually in, the biggest AI labs like OpenAI and Anthropic. So maybe this could be kind of a negotiating tactic that the Trump administration is using to try to get a stake in Anthropic as one of the most, highly valued AI startups out there today. So it really has yet to be seen, but I think just given the amount of pressure from customers, from investors on Anthropic, I think they're going to have to find a way out of this in the next couple days or weeks.
I want to bring this back for a moment here to the race between Anthropic and OpenAI, because last week I believe you had reported that while Fable 5 was certainly making inroads with customers and had a pretty positive reception, you had reported that OpenAI has also been working on its own latest suite of models. Can you just remind us about where its model development efforts are at?
Yeah, so as I had reported last week around the time that, Fable 5 came out, um, OpenAI is obviously not just sitting around on its hands. It is working on developing its next generation of models. And some early testers told me that they were actually very impressed by the next models that OpenAI is working on. The next one will be GPT 5.6 most likely. And so in terms of what this means for the broader race, this is obviously going to handicap Anthropic for a little bit, but I think OpenAI is probably a bit worried about this too, right? Because if they want to come out with a Fable or Mythos level model, which of course they're going to need to do to, stay up in the AI race, there is very much this risk that the Trump administration is going to do the same thing to OpenAI and also tell it to, cut off access to its most advanced models. And so, I think OpenAI is definitely keeping an eye out on this to see how the talks go with Anthropic. Although to be fair, I think historically OpenAI has had a better relationship with the Trump administration than Anthropic has.
Right, and I'm just thinking now, we of course know that Anthropic has a big stake in OpenAI as well. So I think, people just need to if Dario and Sam Altman are annoyed with the calls that Andy Jassy is making to the Trump administration, then I think they better have a good handle on his calendar, because
Yeah,
um,
I would love to be a fly on the wall, after our story broke and, you know, overhear the conversation between Dario and Andy, because 'cause I'm sure Dario is not very happy.
well, and all I mean to say is, if OpenAI comes out with a more powerful model, which poses similar concerns. Maybe it can be jailbroken in similar ways, right? I mean, I can imagine Andy Jassy would have a perhaps maybe a more cautious conversation this time, but a similar conversation with the government. Anyway, it is all a fast moving story, and I want to thank you for coming on and helping us make sense of it. That is Stephanie Palazzolo, author of our AI Agenda newsletter here at The Information. Token maxing had its moment, but a new exclusive report from The Information's Meta reporter, Jyoti Mann, reveals the company has essentially gone the opposite direction now with its AI guidance for employees. I want to bring on Jyoti to share with us more about what we know. Jyoti, welcome back to the show. It's great to have you here.
Thanks for having me.
Tell me about this internal memo that you got a hold of that ran at Meta.
Sure. So, this internal meta memo, which we reviewed, shows that it's spending billions on internal use of AI. And now it wants to rein in the costs by setting up an efficiency program. Now, over the past year, the company's been encouraging employees to adopt AI heavily by using it for coding, research, or everyday work tasks. But the memo shows that it's now moving towards a more structured system for tracking and managing those costs. So, this is really Meta trying to place financial controls around internal AI tools after seeing just how quickly usage has exploded.
And what is that structured plan here? How do they plan to clamp down on token usage?
Well, it's building an internal platform called AI Gateway, which will track AI usage and spending in real time. So different orgs or teams will be able to see how many tokens they're consuming, what they're spending, and eventually they'll operate under budgets and allocation systems. So that could see the company place limits on how many AI tokens employees can use, or how much they're able to spend. And part of that plan actually involves trying to introduce alerts for unusual spending spikes and other better forecasting tools.
And one of the other things I found interesting about your story is that they it sounds like they're actually encouraging people to use their own AI tools more than external AI tools so that they can have more control or visibility, I guess, over the usage. Am I understanding that correctly?
Absolutely. So part of this plan involves migrating and transitioning towards some of its in-house tools, like Meta Code, for example, which is a coding tool. So they want to kind of reduce their reliance on outside providers, and being able to transition towards in-house tools will hopefully help them bring down some of those costs.
That's kind of an interesting decision, though, because if Meta Code was so good, then I imagine it would be a product that Meta would try to sell externally. So I guess if we operate on the assumption, and again, I've never used it, I don't never coded a thing in my life, so I don't know if we could say that Meta Code is not as good as Claude Code. But if it was that good, I imagine they would try to sell it. And so it's sort of like telling your employees, "Hey, we understand this might make you less productive, but we can't really afford for you to use the latest and greatest." That's sort of the awkward calculus here.
Absolutely. And that's why we're seeing the newly formed Applied AI Engineering org has been tasked with trying to improve metacode so that they can rely on it more internally. But I think what makes this memo so interesting is that it highlights a problem that not just Meta's dealing with, a lot of companies are starting to face, where AI has been adopted so heavily internally that the bill's becoming enormous. And now it comes down to trying to reduce those costs.
Now, Jyoti, Meta is not exactly hurting for cash, although we do know that its capex bills are extraordinary. So I think efficiency is a smart play here. But do we have any idea why token maxing at Meta turned so quickly into what you call in the story as this notion of token minimizing? I mean, was it really just senior leaders seeing the bills, or why did things change so quickly?
I think in part it could be the wasteful use of AI tokens. So, back when token maxing was happening, there was a lot of encouragement from senior leaders at the company to embrace AI more. And some employees were kind of turning that into the internal competition to climb a leaderboard that was around at the time to show that they were a power user. And that inevitably drove up usage of AI tokens. But now they're kind of shifting their focus and saying, the conversation's more about not use it more AI, but use it more meaningfully so that it improves outcomes. So that's a transition that we're beginning to see across the broader industry as well.
How have employees been reacting to this new paradigm with token minimizing?
Yeah, I mean, well, it's not come as a surprise to some of the employees I've spoken to. They saw this as sort of inevitable, given that some staffers were using tokens in a wasteful way. So they see this move as quite sensible, as they recognize that unlimited consumption is never going to be sustainable at this scale. But for some employees who have embraced AI heavily and are doing so in a meaningful way, there could be some frustration around tighter controls.
And do you think that this could uh, curb the progress at all that Meta has been making on its own models, its own products? I mean, this kind of goes back to the earlier question we were talking about. Uh, do you think Meta ultimately needs to? I mean, it needs to get a better model out there. It needs to get better products out there. Could this hamper that?
Well, if Meta was simply becoming more disciplined about how employees use AI tools day to day, this probably isn't going to hurt development very much. It's probably just going to improve efficiency. The bigger risk would be if that these cost controls extend to researchers and engineers who are using it for AI model development, where they might not be able to experiment as freely or lose access to the compute resources they need. But I suspect that these budgets won't be placed on those critical areas, and there'll still be enough compute for priority areas like AI model development.
Great. Well, Jyoti, I want to thank you for coming on. That is Jyoti Man, our Meta reporter here at The Information. Microsoft is considering some major changes to its Xbox division. Our Microsoft reporter Aaron Holmes scooped some of its behind the scenes discussions late last week. I want to bring on Aaron to share with us more what he knows. Aaron, welcome back to the show. It's great to have you here.
Happy to be here.
What did you find out with respect to Microsoft and Xbox?
So, Xbox CEO Asha Sharma is planning a pretty major overhaul of the entire gaming unit. Specifically, we know that layoffs are coming and that she's planning to cut costs. But I also learned that Sharma wants to increase spending on game development in the coming year, potentially spending even more next year than Xbox spent in the past year. And specifically, she wants to speed up some of the new games that might be coming from franchises like Halo and Fallout and Elder Scrolls. Some of those haven't had a new game in more than a decade. At the same time, I've heard that as Sharma sort of plots this major overhaul of Xbox, Microsoft has considered, potentially restructuring Xbox relationship to Microsoft to either, make it a subsidiary or potentially spin it out entirely. And possibly make it easier for Xbox to be sold to another company. I don't think there's any imminent plans for that, but I'm told that all of those options are on the table.
Do you think this is more of a Microsoft driven idea or an Xbox driven idea? I wonder.
I think it's a mix of both. One thing that we've seen is that Xbox has much lower margins than the rest of Microsoft's business. Part of that is because they have this entire, hardware business that's extremely low margin. They've also had a hard time selling consoles in recent years, and those sales have been declining, and costs have been rising significantly, both in hardware, but also, just in the cost of all of the people that they employ, and it's kind of becoming a problem in the eyes of some Microsoft shareholders. So there is definitely an argument to be made that spinning out Xbox or selling it, or just taking it off the balance sheet would make Microsoft a more kind of attractive stock for investors and shareholders. But at the same time, I'm told that CEO Satya Nadella very much believes in Asha Sharma's vision and really wants Xbox to succeed, and potentially sees this restructuring as one way to make Xbox even more successful than it is as part of Microsoft.
Now, you talked about the margins earlier. Is Xbox right now as is? Is it a profitable enterprise? Does Microsoft provide any additional funding, or does it have a development budget at all that Asha Sharma and company can make use of?
So Xbox is technically just a division of Microsoft, meaning we don't actually know exactly what its P&L looks like. That the company doesn't clarify that in their earnings, and it's possible that some parts of the business are being subsidized by other parts of Microsoft. What we do know is that Sharma actually said to staff in an email last week, which she then made public. She published the email. She said that they have accountability margins of 3%, and that's an internal metric that is, roughly similar to EBITDA. So that suggests that they
3%. That's it.
yeah,
That's like nothing. I mean, like
right,
that's
razor thin. Yeah,
this is
it
like a
implies that they're
break-even
making money,
business.
but barely any.
And tell me, is this like the gaming sector at large? I mean, is Xbox kind of an anomaly here, or has gaming, broadly speaking, kind of been through the ringer as well in terms of business performance?
Yeah, I mean, the general sort of benchmark according to analysts, for, you know, gross margins in the gaming industry is like roughly 15%, which is still, much lower than, typical software margins. But at the same time, it looks like potentially Xbox is even lower than that right now. And I think that's part of what Sharma wants to fix is, A, cutting costs on things that don't seem likely to drive a lot of revenue, and B, spending in areas where, they have these game franchises that are already known and beloved by fans, and trying to invest more in putting out new games from those franchises that are almost guaranteed to drive a lot of sales.
Right. And Aaron, I should remind folks that you had a great weekend big read a couple months ago on Asha Sharma that we will link in the show notes and that I encourage everyone to read. But just remind us from that story and from the reporting you did, the changes that you reported on with respect to the game development last week. How does that fit into Asha Sharma's broader strategy for Xbox coming into this role?
In a lot of ways, I think that she is kind of walking a fine line where, on the one hand, when she first came into the role earlier this year, she really wanted to prove to, Xbox fans and also to her own employees at Xbox that she is not just there to, wind this organization down or to cut costs and improve margins. Obviously, that is something that she does need to do, but it's not her sole focus. Or she really wanted to get that message across. And I think that now what she is trying to do is kind of maintain that promise that she wants to keep investing in game development and actually making more games that fans want to see. But at the same time, she does need to make it a sustainable business. And she's been signaling, and from what I learned reporting this story this past week, I think that might look like potentially spending less money on the dozens of smaller game studios that Microsoft owns. I wouldn't be surprised if we see Microsoft start to shutter some of its smaller game studios in the coming weeks or months, while basically, consolidating more money into the larger, already successful franchises, including many of the franchises that Microsoft has spent billions of dollars to acquire over the past few years, by the way, and basically making those more powerhouses of new content for Xbox.
Right, and I think one of the most important things you mentioned that I think could sort of determine this, at least in the short term, is as you said, Satya Nadella seems to have a lot of faith in Asha Sharma in terms of building the business, at least for a little while here. So um, maybe that will sort of help buy some runway here in terms of not spinning it out immediately and helping to get some of those bigger changes underway quickly. Aaron, I want to thank you for coming on. That is Aaron Holmes, our Microsoft reporter here at The Information. GPU hosting company Hydra Host raised $100 million at a $800 million valuation. The deal was led by Kindred Ventures. Joining me now to talk about the milestone is Hydra Host co-founder and CEO Aaron Ginn. Aaron, welcome back to the show. It's great to have you here.
Yeah, thanks for announcing, I guess, the largest Series A ever, right? With 800 billion, right? So,
I was gonna say, I was like,
yeah,
800 billion. I think we would have put you at the top of the show if
yeah,
that's how
true.
big.
Yeah, yeah. We have with Elon, right? Yeah,
Yeah, yeah, okay. $800 million. Look, it's not chump change. It's a big round.
yeah,
Congratulations. We've had you on the show a couple times before, but never actually to talk about your company. So remind us, where is the company at right now? What do you sell? And we'll talk about the direction shortly.
yeah. It's true. Yeah, we've always been talking about policy and different things happening across the world with GPUs. But so yeah, we started the company over 5 years ago with the goal of providing a software for data centers so that they could serve end customers. And we thought that the rental kind of orchestration layer was going to compress, and that public cloud was going to start dying as a concept as the underlying infrastructure changed. And we're very early in that thesis because we saw a lot of AI companies doing the same thing that crypto miners were doing, which was that they're leaving the cloud to have more control of the hardware, also have more control of the basically networking orchestration kind of layer because they need more performance. But data centers were not prepared for that. They were previously just a cog in the wheel. Public cloud, they were not in a position to make most of the upside in the transaction. They were just a cost center. And so we today are one of the largest neoclouds in the world. And what we provide purely actually is an IaaS layer, an infrastructure as a service layer, where we are a software company. We are actually the largest neocloud that actually is a software company, and the underlying assets are run and owned by the data center. And they are in the position to make the majority of the upside because what they're going to do, they're going to build more data centers, which we all need. So we provide all the expertise and software support and customer delivery for the data center so they don't have to go build their own stack. And they just basically buy Hydra, plug it on top of their own infrastructure, and then they can go to market.
Right. Can I ask you, you guys are a close partner of Nvidia. Are you only using their chips, or are you using other companies' chips as well?
So yeah, what we do is we help the data center procure. So you can think that we're a little bit like a franchise company.
Okay.
So I like to tell data centers we build Chick-fil-A. We don't build Taco Bells, even though Taco
Okay.
Bell is like super
Chick-fil-A.
OG. Even though Taco Bell's super OG, I don't eat there anymore. But in college, I definitely did multiple times a week.
There's
But yeah,
nothing
so
wrong with eating Taco Bell today. Okay, let's be
yeah,
clear
yeah.
there.
Yeah, it is. You think about like recipe wise, it is probably the most amazing company in the world because they have like the same six things that they just kind of remake over and over again. But so just like how you could be a food franchise or like a hotel franchise, we control all the procurement. And the way we do procurement is like it reflects the trends of the market. So we do have some of the best data in the world because every one of our data center locations is a independent operating data center with its own OpEx cost structure. And so we get to reflect a lot of the true pricing trends around GPUs.
Right.
So a lot of the current trends you were seeing about like basically the sold out kind of orientation, we basically started increasing builds really aggressively at the end of last year because we started seeing the utilization increase. But our GPU allocation across the network in terms of what we advise is reflects the market, which is that Jensen
So,
generally
so
.x.
is there more TPUs coming into the conversation then, or
No,
more?
there's not.
Say it
There's not.
again.
There's not, no.
No.
No, there's not. So there are like, I would say the orientation around that kind of chip is very isolated to like 2 customers, and it's really unclear the customer base beyond that. Versus the customer base for GPUs or like, let's say like associated GPUs you can buy from an OEM, like Positron, like we support them, AMD, we have them in our network. But the kind of hyperscaler focused ones, they're generally a defensive mode strategy. So it doesn't really make sense for data centers who are in the business to make returns. Why would they defend the person that took all of their lunch before? Like so it
Right.
doesn't yeah. So I think the market for that product actually is quite small.
Right.
Even though those 2 customers, Anthropic and Google, could be actually quite huge.
How do you see Vera Rubin changing your business, and also the makeup of the workloads in terms of how many customers will use Vera, how many are okay with Blackwell? How do you think about that?
Yeah, what we tell data centers is to think about GPUs like buying a car. And so I'm personally an Audi fan, so I'm a Volkswagen Group fan. So when I go get a Porsche and an Audi, I expect a different type of technology experience than when I get a Volkswagen. But it doesn't mean that the Volkswagen itself is not worthwhile. And I think for this market, I think now people understand it because of the utilization and the return profile of H100s. If you had bought H100s back during the original boom, you're literally making the best return profile probably of any GPU right now in the market. And so that's kind of the way cars work too, is that the Halo product, which is introduced in the Volkswagen, is just an easy way to understand this, but it applies to all cars like Lexus and Toyota and BMW and all of its excellent, X and the numbered lineup, Ford, Chevy, like they all kind of do the same thing, which is that the Halo product actually drives the overall technology of the company, and then it diffuses down the line. And so the bulk and the meat potatoes resides in Volkswagen, but Porsche and Audi introduced the new technology. So, but the customer base is completely different, and the use cases are different, aka workloads. So when Vera Rubin comes out, it's just going to draw in the same people who are using GBs or a very large P300 clusters. They're going to upgrade because their use cases are different than the guy that's running the batch differencing workloads, which is more like the Volkswagen. So the technology will continue to downstream through the stack, but the upgrade cycle is basically part of actually what customers really want. People can complain about it, and people like data centers or whoever, but it's like the same thing. I think like yourself, like your car dealership, like that customer is just a different type of customer, like the Frontier Lab customer, like
Right.
that they're always
Right.
going to want it, or a very large scale open source company. But the bulk and the meat and potatoes of the market is going to be a lot of these inferencing platforms. They're going to use it, but they're mostly going to use the advanced midlife kind of card sets, very large scale clusters there. And they having the ability for customers to pick and choose actually creates the ability for the midlife market to have access to the best stuff. It's just going to
Right,
take like two
because
or
it
3 years
actually
to
it
get
actually
down.
creates because I mean capacity is the big issue here. Can you even get your hands on the chips? And so I see your point. It
Mhm.
sort of adds liquidity to that market where
Yeah,
you
yeah.
can get your hands on those chips that they might not be best in class, but they're powerful enough, and so they are certainly one to focus on. Aaron, I want to thank you for coming on. Congratulations on the funding round. That is Aaron Ginn, CEO and co-founder of Hydra Host here on TI TV. Healthcare AI company Abridge announced last week it is working with Nvidia on a new model focused on clinical conversations. Abridge has been a booming name in this category, valued in a funding round last year at $5.3 billion. I want to bring on Abridge co founder and CEO Dr. Shiv Rao to tell us more about where the company is at. Shiv, welcome to the show. It's great to have you here.
Thanks, Akash. It's a privilege. I appreciate it.
So, walk us through what you announced last week with Nvidia.
Yeah. Last week, we announced that we're just taking a little bit more control at the model layer. So for any given number of tasks that we're solving, some tasks don't require the frontier model. Some absolutely do. Some make sense for us to ride that wave, but some actually make a lot more sense for us to assert all of our proprietary advantages in terms of like the edits and the adjustments and the feedback and all the context that we have access to. And so there we're going really deep on being able to do the familiar playbooks around distillation and, post training and fine tuning to make sure that we can kind of hit it out of the park in a really differentiated way.
And so remind us now the suite of products that Abridge offers. I mean, initially what I knew the company to be was sort of the ambient transcription company that helps doctors turn clinical conversations into notes, make that there was that term for what was it the term for the work that you did outside of the
Yeah,
office
people
was
call it like AI scribe maybe or pajama time. Pajama time.
pajama time. That's what it
Yeah.
was.
Yeah. Yeah.
Because I remember when
Yeah.
we
Yeah.
talked probably a year and a half ago now, it was pajama time. So it's turning that
Yeah.
pajama time into more productive AI driven workloads. Is it just the transcription now, or the platform has expanded, right?
Yeah, it's expanded a lot. Really, our core thesis is that in the next 5, 10 years, we're not going to be able to fully automate what a doctor or a nurse does. And if that's true, then, well, the conversation, the dialogue between them and their patient, that's actually one of the first signals in healthcare. It's upstream of so many workflows and it's computable. You can build a platform on top of it. And so where we started was being able to leverage that signal to help with notes. Now we're expanding into not just orders and codes and revenue cycle, ICD codes, diagnosis codes, but we're expanding even further than that. We're really trying to help clinicians save time, save money, and save lives. So yeah, absolutely. I'd say the industry first started off talking about this as if it was like all about the just like the scribe functionality. And then folks realized it was more and they started to call it ambient in healthcare. And now I think in healthcare, people are just recognizing that this is the AI layer.
Right. So let's go back now to the workloads that you use the models for. So have you been using all of the major models from the AI labs, Anthropic, OpenAI? You were pulling on all of them?
Yes, exactly. Yeah, absolutely. Evals are the operating system for a vertical AI company like us. We're sitting across multiple systems of record. We're getting edits and adjustments every single day. We're on a run right now. Over the next 12 months, we should at least be touching over, about 100 million encounters, but it should probably be significantly higher than that. And so the amount of edits we get are some multiple of that. And we're able to learn from all those edits. And so for certain tasks, those edits allow us to just hit it out of the park. For other tasks, we always want to be riding that frontier wave. And so evals really are the key for us. We need to understand what size brain are we going to apply to what size problem, and make sure that as the ground continues to shift every week or two, that we're always shipping the best possible product.
So was this a cost issue then, the decision to make your own model with Nvidia? First of all, is this a net new model that you haven't been using before? And was it a result of costs from the model layer having gone up, or walk me through the decision?
And so first principles are performance, latency. So a lot of the work that we help clinicians do needs to be real time, essentially. So I'm also a practicing cardiologist. I go in to see a patient, and the technology needs to be listening actively. It needs to prepare me before I walk in the room. And then when I hit stop, I need to be able to swivel my chair and see all the artifacts that we generate right there in the records for me to trust and verify, review, and edit and adjust as needed. And so the a lot of our issue right now, a lot of our challenge, a lot of our differentiation is being fast enough, being in workflow. And it oftentimes makes a lot of sense for those specific tasks for us to go deep and, control as much as we possibly can.
And what about the cost of all this?
Cost is definitely like it's a thing. It's not the first principal thing for us. We are I think a little bit different from a lot of the AI companies out there. From a P&L standpoint, it's not like the burning issue. At the same time, I think is it upside? Absolutely, there's no question about it. Anticipating top tokens continuing to get more expensive over these coming months. It's awesome to know that we have full control over our P&L.
Right. Can I ask you, you've clearly been watching the model game very closely. What was your reaction last week to the drama, I guess you could say, around Fable 5 came out? It was very impressive. I don't know if maybe your team experimented with it all in the back end. I'm sure you have researchers playing with it. And then it gets blocked, which obviously we'll see how that plays out. But did you get a chance to work with that model at all in your testing facilities?
Yeah, we did. It's interesting because every single model that comes out, you need to, as you need to work with it very differently. And you need to go very deep now on figuring out how to build the harness around it to be able to get the kinds of outputs that you think they're capable of. And so it takes some time. And so thankfully, thanks to our relationships with the frontier model companies, we tend to get advanced access, and we tend to get the chance to sort of kick the tires and understand how we're going to be able to apply those models.
And was the model, I mean, Fable 5, I mean, Mythos, do you anticipate these could have major breakthroughs for the clinical setting as well?
Yeah, to an extent. I think that there are certain tasks in healthcare that these frontier models are just going to absolutely crush. There's no question about it. I think the real differentiation for vertical AI companies like ours is getting really, really deep into workflows and working with data sets that just no model's ever seen before. And a lot of times, it's not just the data, it's the business logic, and that business logic lives in someone's head in a basement, in the revenue cycle department, in a hospital. And so our challenge is to, when a new model comes out, is to like figure out what tasks do we think we should apply it to, try to apply it, measure according to the metrics and benchmarks we think are most important, and then iterate to see if we can improve, and then figure out, like, does this actually work? Could this be viable in workflow? And if the answer is yes, then we're going to run as fast as we can in deploying it. If the answer is no, then we're going to just like sort of stay close and watch and see. But that's why it's so important, I think, to be able to orchestrate across any number of different models. As long as the first principle for us is shipping the best possible product, then we're going to be very agnostic. Even if we are investing heavily into our own models, it's really important that we not get too attached. At the end of the day, it's really about delivering the value.
And then how do you think about, given how regulated an industry healthcare is, and the opportunity to use these powerful models to facilitate healthcare. There's also the flip side to that, which is that the more powerful the models get, then I mean that could pose a risk, I guess, to data privacy. I mean, this is the whole issue with
Yeah.
Mythos and Fable 5. And so I guess I wonder how you think about the trade-off here between we have the super powerful model that maybe could make pajama time even easier, right? Maybe we could treat 30 patients in a week instead of 10. There's that
Yeah.
opportunity. But then there's the whole risk that if we use Fable 5, Mythos in a clinical setting, maybe privacy kind of goes out the window. Like, how do you think about that trade-off?
Well, I think how you wrap the model, how you constrain it is really, really key. And, we get back to the harness and how we think about that in healthcare. These are regulated workflows, as you said. Data is incredibly, private. Being able to check off all those compliance boxes is absolutely paramount. And it's what it takes to be enterprise grade. We have a mantra in the company. We want to save time, we want to save money, and we want to save lives. So we have certain use cases that are actually helping clinicians feel like superheroes with all the context around who this patient is so that they can ask the right questions, close all the right care gaps, and actually improve the outcome, the clinical outcome, not just the financial outcome for the patient. Those are the workflows where we need to be most careful because they have the highest stakes associated with it. If we're giving the clinician bad information based on bad context, then that's a really big problem. So, back to evals, I think like that's the rigor. We need to be able to benchmark how well any of this is performing, but we're not sort of deploying models without that sort of harness around them into a health system and
Right.
like holding our breath and hoping and praying it'll go well.
Right. Last question for you, Shiv. So is your product now at the point where it is making recommendations for treatments to doctors as well?
Yeah. Yeah, absolutely. So we have a clinical intelligence or clinical decision support feature inside of our product. So before I walk in the room, for example, to see a patient, Abridge might help me understand, hey, you're about to see Akash. This is his medical history. You might want to ask him these 3 questions before you walk in. That he's been calling about it. I walk in the room and I feel like a superhero. I know what questions to ask. I know how to build rapport with you very, very quickly. We sit down, we talk. No interruptions, no flashing lights, no beeping sounds. If I look down, it can give me a bit of a cue. It can help me understand, hey, based on what he just said, he might be a candidate for a clinical trial. Based on what he said, maybe you want to rethink the blood pressure medication you started for him. And then when I'm done, I can go deeper and do that research to better understand if there's something I should have done, not just for your blood pressure, for any other condition that we talked about. And all of that is obviously based in the evidence and it's based in the literature. And it's all baked into the workflow. So it's very, very seamless end to end.
Great. Well, Shiv, I want to thank you for coming on. That is Dr. Shiv Rao, CEO and co-founder of Abridge here on TIATV. That does it for today's show. A reminder, we are on this stream Monday through Friday at 10 a.m. Pacific, 1 p.m. Eastern. If you can't make it then, episodes are available on theinformation.com, on our YouTube channel, or wherever you get your podcasts. Make sure to follow us on social media, on X, on Instagram, on TikTok, and on LinkedIn. I'm already excited for our next show tomorrow. Have a great rest of your Monday. Bye-bye for now.